Felix here, and happy Tuesday to you, happy day after you had a very long weekend. Probably a lot of you did. What's the market doing today? Well, what's with the dramatic title, you wonder? Well, there's a lot of narrative out there from bond traders, and that's really one of the key things I want to talk about, but of course also what the market's doing today, and it's going to be an interesting week. We're basically pinned down. Now, what have I done? I've actually sold stuff. I have indeed, and I'm going to tell you more about that here in a second. Of course, none of the following is financial advice. You know that by now. Please be smart about it and so on. Don't just blindly follow some guy on YouTube. It's not the smart move, is it? Even if he's got, a nice dog and all that sort of thing. And let me show you what we're talking about here. So I've been talking to some bond guys, and they're all very excited. They're basically saying bonds are back. And the other narrative is that they're saying, look, stocks are over, equities are over. There is no point in owning shares. Look at this chart. Equity versus bond flows is a cyclical beast. When you have lots of money pouring into stocks, like running into 2015, and then again from 2020 onwards, everyone is buying stocks, lots of stock buying. And what happens after that? Well, after that, the opposite happens, and everybody starts selling stocks and buying bonds. And that's very much the same narrative that we had in 2011, 2012, 2015. We're seeing it again. So the forecast is we haven't just turned the corner here, but no one's going to be wanting to buy stocks ever again. Why? Because bonds are very, very profitable. And there certainly have been. I did a video on that the other day. If you guys have paid attention, and that's also what I've done. So I've actually sold some stocks and I have bought some bonds for that very reason. But there is always a but. This here is the S&P 500 chart for the same time frame as up here. So if you believe the top chart, which bond sellers will show you, and you draw a line, say, from the peak downwards, I'm just going to do that roughly here. That was the peak, when everybody apparently disliked stocks forever after. I was never going to buy any again. And yes, there was a wobble. I have to sort of lengthen this line a little bit here. There we go. There was a wobble in the market, and there was another wobble straight afterwards. I like the word wobble. And that was 2015, if you remember. That wasn't particularly brilliant year for stocks. But what happened afterwards? Well, the market kept going up, didn't it? And yeah, there was 2018, that was pretty unpleasant and so on, and there was COVID, but fundamentally the market still continues to go up, the S&P. So have I sold every single stock that I own? No, of course not. I've just done a haircut across everything, and to profit from what I think is the interest rates coming down, and therefore bonds going up very, very much. And how does that work? Well, it's a very simple equation. So say you buy a 10-year US government bond, and it's trading at whatever it's trading at. What is it trading at? Where is it? Here we go. Markets, bonds, 3.559. Let's call it 3.5%. No one's buying this to get 3.5% yield because that's appalling. That's half than it is in inflation. But what happens is when interest rates go down by 1%, the value of this bond essentially goes up by 1% times the number of years left on the bond. So you're buying a 10-year bond, you're buying a 30-year bond, and you get, your 10x, you're getting potentially even your 30x, maybe not quite 30, but something in that range. So essentially, you wait for interest rates to be near the peak, you buy the bonds, you wait for interest rates to come down 1% or so, and you've made a 10 return, 10x, well, 10%, 10 to 30% return on that, and that's the exciting part. So that's why people do this, and I just wanted to explain this once again here. If you want to know another way that Wall Street actually makes money, because I'm not the only one buying bonds, this particular webinar here, live masterclass, which I'll do from Cannes, from that beautiful view exactly there, you will be able to show you that as well. It's not about bonds. It's about how by they, I mean the Wall Street banks, make every single trade that they do more profitable and less risky than you. So you take all the risks, they don't, and that's because they understand how the market works and they understand how to set up a trade. It's a little bit more complex, but not particularly complicated. And I will teach you that, the complete thing, from beginning to end. So join me for that. You've got to sign up at felixfrancenorg.secret. It won't be on YouTube, and we will run out of spaces. That's always a promise. It always happens every single time. So go to felixfrancenorg.secret and learn Wall Street's biggest trading secret. Now, what's going on in the short term here? For those of you guys who received our brand new newsletter today, I'm very excited by that. It's officially launched. So we've sent a free copy to absolutely everybody, and I hope you enjoy it. And you're, of course, very welcome to subscribe to it if you find it useful. There'll also be a daily update. There'll be on the at least the premium tier, our actual trading ideas, our best trading ideas every week, and so on. And we've had some pretty decent ideas, but I'm not going to run through those here. So the RSI on the SPX basically screams overbought. Overbought means either you are in a genuine rally or the party's almost over and you're the last one standing and they're going to turn the lights on soon, turn the music out and start, mopping you out of the room. And on the NASDAQ, same story. NASDAQ also very overbought. And there is an interesting thing going on here with the options positioning that we get to in a second. I'll explain that to you, and therefore how you understand and are better able to predict which way the market moves. Now, one thing is resistance, lots and lots and lots of it. This downtrend here is very much alive and kicking. And yeah, we've touched it here and there, and we're not doing it again. But it tends to be a fairly strong resistance, closing below 4,000 on Friday, sucked for those of you who wish for a rally. And then we've got some significant options support resistance there as well, which I'll get into in a second. Now, you want to know why the market actually rallied last week? Very, very simple reason. And again, it's understanding market flows. It's understanding who's doing what. Let me just show it so you can actually see it. So the red line is shorts. The people that you like, not the Bermuda ones. This here are people shorting the market, and by people I mean generally funds, because it's usually funds doing it. So they are selling, right? The shorts have been selling, and they thought the market was going to come down because hell was going to freeze over, rates were going to go up forever, and it's going to be the calamity of all recessions, and earnings will be terrible, and all that sort of good stuff. But what have they done since? Well, that little bit here circled shows you that they got caught down with their shorts down. And they had to unwind those short trades because they were starting to really, really hurt them because the market went up when people didn't expect it. Therefore, all the CTA money chases the rally up and it pushes it up even further. And then the shorts go, this hurts. We have to unwind some short positions. How do we do that? But by buying stuff. So this kind of rally becomes a little self-fulfilling here. And that's exactly what we're seeing here. It's a little similar to what we saw in October, but we are at a lower position here from a short point of view. So good to understand. Now, JP Morgan actually gave us a view on this, and he says, well, not he's not with us anymore, is he? In spirit, they're saying the positive catalysts we are highlighting from October, which helped drive a rebound of 27%. Peak in bond yields, in inflation and US dollars, China reopening, and the more benign European gas prices, which have collapsed. No one's frozen to death here. They're now in the open. Everyone knows it. So one could argue that this is just a reiteration of the consensus view that first half of the league. So JP Morgan is basically saying, look, we know all the good news. This isn't really a reason for us to be rallying, and therefore we don't really believe in this rally. That's JP Morgan's expectation. Now, what do you therefore do? Well, a lot of people who are expecting a not particularly wonderful 2022 from a trading or investing point of view are therefore going to the casino. And I don't mean the one here in Monaco, which is nice and shiny, although I've never been in it, but to the zero-day options casino. Options gambling is at record levels. We've never seen literally 45% of all options expiring within the same day. This is sort of the next meme stock phase. Basically, all of Reddit decided it was a brilliant idea because there's massive leverage and huge amounts of movements. I could be up 2,000% or I could be down 10,000% all in the space of a day. If you like that sort of a thing, seriously hand your wallet, your credit cards, and your trading account to somebody else you trust. Don't trade, don't gamble. This is not what we do. This is not what how we make money. This is just complete madness. So interesting to watch the madness, and we can benefit from it, but we don't want to participate in this. Totally insane. Yes, this is my plan here in a few words. So I sold some shares, as I said. I bought bonds instead, and I plan to trade a lot more in 2023 because I think it's going to be really, really nice and profitable. That's essentially my plan. And that's kind of, in 2022, we actually were pretty moderate in terms of trading. We didn't do that much, but we still came out with 126% return on capital, and we're going to trade a lot more this year. And of course, I'll share those trades with you guys in the community. If you want to learn how I made 126% return on capital in 2022, book a call with me or with us rather. You'll be speaking to one of my marvelous team at felixschwenz.org/call. Just have a chat with us. What do you need to do that? Just literally book a call, have a chat with us. Or you can chat with me in our private group. We have a private group on Facebook, felixschwenz.org/FB group. We'll get you there and you can have a natter with us. But if you get into that group, just DM me because otherwise we'll probably miss you and we won't have a chat. So as soon as you're opted into that, just say, send me a wave or something and we can have a chat. And I'm super happy to answer anything you have there. Now, there is a big one. The S&P VIX. What is VIX? VIX is the fear index. VIX is for fear for sort of, usual people. And it's at very low levels. Very, very, very low levels. It's literally at below 20. It doesn't close below 20 all that often, at least not in recent times. We draw a line across here. Whenever it closes below 20, what's happened to the S&P? Well, the S&P is typically tanked. It sort of calls the peak of a market. Why? When we go up in a gentle fashion, sort of fear dissipates. Everyone feels happy and giddy and runs around in shorts and that kind of thing. And the market tends to then lose steam because everyone's drunk by the pool. So that's what VIX is saying. I'm not saying that's going to happen, but there is that. Now, what's the week about for me? I think the week's all about dealer hedging, and that's a funny concept. Essentially, if you buy an option, you're not buying it from me. You're buying it from a market maker, like a guy in between, one of the guys in the funny coats on the New York Stock Exchange running around waving papers. You know those guys. They are called market makers or dealers, and they are the middleman, essentially. That's who you buy from. Now, those guys want to be market neutral. So say you buy a call option from them, which means you are 100 shares positive. Now, they are 100 shares short because they've sold it to you. And therefore, what are they going to do? Well, they're going to buy 100 shares of the actual stock or S&P in the market to kind of balance themselves out because they don't want to have any risk. They just want to make money from you. So what are they doing this week? Well, they're going to be hedging. That's what it's all about. So what does that mean? Well, they're basically selling strength. So the market goes up, they sell. And the market goes down, they buy. So what does that say to you? Just walking sideways. That's essentially the way I look at the market here. Unless something unexpected happens, of course, always, but that's sort of the positioning here. But there is some excitement this week. There's some genuine excitement. If you, are Japanese or just particularly fond of wasabi peas, which I am, then following the Japanese yen is going to be the most exciting thing you could possibly be doing this week. Why? This here is essentially the volatility of JPY, the yen, and it doesn't take a genius to work out it's at pretty elevated levels. And this chart goes back, I can't quite read to when, I think to 2011. So what the heck is happening there? Well, Japan might be on the edge of abandoning its low interest rate environment and go back to sort of, percent and a half interest rates. And therefore, what are they going to do? Well, they're going to give the good old yen a shot in the arm, a shot of the good stuff. That's going to get the yen quite possibly to rally up. Now, here's the US dollar to the yen. And there is some serious support here that we need to watch out for if you are into Forex. About 126 or thereabouts is where that support line sits. We're right here. That's the bounce off that we're watching out for. But so you can see the yen is basically, because it's dollar over yen, the yen has been falling like mad, and it's now recovering. Now, if it breaks through the 126, I think there is a fairly decent chance it could regain these sort of good old levels of 114 or so, which is a, that's a 10% move there. That's pretty profitable potentially. Now, China is shrinking. I don't mean in size or, number of dumplings available or something. By the way, it is Chinese New Year or Lunar New Year if you're not Chinese on Sunday, which of course we'll be celebrating with a very large intake of the good stuff. More deaths, fewer births is how Bloomberg puts it very positively. Essentially, their population is shrinking. And a lot of this is just birth rates have come down a lot, which is not usually what governments want, because the one way to achieve really easy growth is through people having lots of babies. And that isn't happening. Why? Well, I'd say it's wealth. People are getting more wealthy. And when people are getting more wealthy, well, they think about stuff like, I want a bigger apartment, I want a sea view, I want a holiday, I want a full-time massagist for my golden retriever, those kind of things. Whereas previously they just thought it's lovely to have a big family and it doesn't really matter if there are 19 of us in a room. So that's essentially what happens, generally speaking. As we get wealthier, we have less babies. I think that's probably fair statement. So what does that mean? Well, stock market, Chinese stocks looking a little down this morning. I'll show that to you. I think people are sort of going, oh, really? Like Xpeng down 3%, NIO down 2%, Baidu down 2%. Is it the end of the world? No, there's still a lot of people around. It's not like the consumer is disappeared overnight. And obviously these trends can change over time. But it does put a potential dampener on the really easy growth for your kind of consumer goods, right? And that's why the likes of Procter & Gamble would like you to have 20 babies, because that way you buy more asbestos-laden baby powder. That kind of thing. Now, the US is shrinking as well, but they're shrinking something different. They're shrinking its consumer. So in a sort of, what's that lovely film where they shrink the children? What's that film? Can't think of it. Come back to me in a second. Anyway, Roald Dahl, right? What's the? Okay. Anyway, moving swiftly on. So the US has managed to, for the first time ever, pretty much, not print any money. So this is the M2 money supply, which is essentially what people consider money to be. And it's not growing. It's always been growing, pretty much, because the government always prints money. And they haven't done that. Now, what happens when you stop printing money? Well, there is a second line on here in sort of whitish, and that line is personal, consumer. You know the word? Expenditure. Exactly. Well done. Consumer expenditure goes up when you print money because you dish it out. It's free. It's easy. The world's wonderful. Asset prices are going up. Your house prices are tripling every other Tuesday. And everything is wonderful. You're thinking about gold plating your golden retriever and all that kind of stuff. But when the money stops growing and it actually starts to shrink, which is what the Fed's intention is, I imagine, then the consumption, which is still up here, might just take a little bit of a nosedive too, and that could, of course, hurt consumer stocks. So something to watch out for. How much the Fed is going to decide to shrink you, the American consumer, by will basically depend on a few blokes in Chicago and Joe Biden, or the union movement, as I call it, and essentially wage growth. So wage growth has been picking up. This is wage growth. And that's the inflation nightmare, basically. That's, Jay Powell wakes up every night screaming, going, no! Wage spiral. And somebody, manservant, looks after him, dries him down, changes his pajamas, brings him another sherry, that sort of thing. That's just about looking like it might start coming down again. I mean, it's a little bit of an optimist's view here. But if it does come down a bit more, normally the turning point for Fed funds rate, which is the interest rate, which is that sort of unpleasantly brownish line in the background, it normally starts to come down around about the time when wage growth starts to turn from going higher to going somewhat lower. Right. You guys got an echo. Okay, I'm sorry about that. Let's try that. Still echo? Let me try to turn this down. That might do the trick. That might do the trick. Thanks very much for letting me know that. So watch out for wage growth numbers. And given that they're probably vastly manipulated, adjusted, it's a little bit of a tricky one to follow. But that's essentially what we want to see, get that number lower. And I think that's partially also why we had that excitement Friday past when wage growth numbers came in a little bit lower and then everybody started, having raves and parties. Now, earnings, I think, are the new CPI inflation Fed decision data. And there is some data out essentially showing that the reactions to earnings are getting a little more unhinged. Basically, less downers were taken by the lot on Wall Street, and they are getting a little too excited too easily. This is the big stuff this week, and there is one number that stands out here, or one ticker rather, that stands out here very, very much. Netflix, that's probably the biggest one this week. But there are, today Goldman's and Morgan Stanley and so on. We look at that in a second as well, putting out fairly decent numbers, I think. Procter Gamble, there's also a big one, a big indicator for how the market is running. And then if you're more in the sort of oil commodity game, watch out for Schlumberger as well. I'll be trading some of these. I wanted to trade actually Goldman's and Morgan Stanley, but I didn't realize yesterday was a holiday. So I was going to set that trade up. It was in my diary yesterday afternoon saying, set up trades for tomorrow. Can't really do that, can you, when the market's closed? So the gift of the day is going to be UAL. I look forward to that. And I might do some on Schwab, anything basically that has volume. Netflix, P&G, CMA, maybe we are able to do. I'll have a look at where the volume sits. State Street, Ally, and so on. There might be a couple more as well to kind of like get our teeth on. If you want to understand just exactly how we do that, okay, in a nutshell, right? So say this is your stock chart, right? It moves a bit like this. What you do is if it's trading right there, you say, well, I think it's going to stay in this range, say plus 10%, minus 10%. And, that's your trade. That's literally your trade box. You set that up for the day and you aim to benefit from falling volatility. And if that sounds like gobbledygook to you, well, happy to explain it to you in a little bit more detail. But that's sort of the very rough sketch of that. We do a lot of that. I'm a big fan of that. You're very welcome to check out how we do that. Just book a call with us at felixfriends.org/call. Give us a ring and we'll gladly chat you through it and see if it's something that might be suitable for you. Or as I say, hop over to the Facebook group on felixfriends.org/FB group. YouTube should start chat groups, shouldn't it? I think they should. It would be fun. So instead, I have to drag you by your ears to somewhere else where we can actually have a conversation. felixfriends.org/FB group there. And of course, don't forget to sign up for the masterclass on the 28th. Links down below, felixfriends.org/secret. Now, let me take some questions here. So if you have a question, if you have a thought, if you have any thoughts at all, then do share them in the chat. It is free and I enjoy answering them. So that's what we're going to run through here. So just glad this wasn't pre-recorded. Jalen, what are you talking about? Okay, some of you are grumbling about echo. Sorry about that. Any chance you tell me SPY max pain as of today? Last Friday was 390. Okay, let's run through a couple of questions here from the beginning. Apart from audio issues, which I apologize for. Could you please repeat everything to the audio? It can't have been that bad. Am I going to buy more Tesla today? Yeah, it's an interesting one. It's actually in the newsletters today. We talked about Tesla a fair bit, and let me pull that up for you. Trading Floor Whispers. If you go to tradingfloorwhispers.com, you can sign up for it as well. There I am. And here's the last one. They won't always be public, but we're being generous here. So it's a fairly lengthy one. So let me search for Tesla. Get this near the bottom end of it somewhere. Apple, Google, Tesla. Right. So it is oversold, down 70% from all-time highs, and it may be a good long-term investment. But technically, there's nothing to suggest higher prices in the near term The catalyst may come from earnings or they may not. It worries me that the recent price cuts paint a worrying picture for demand. Would love to be proved wrong. So bullish above 166, which is the 200-day WMA. Targeting 182, then there's a profit-taking line, or bearish below 166, targeting $82. Yeah, said it. So, bit undecided, quite frankly, on the good old Tesla chart here. Really not quite clear what's happening there. There isn't a real reason for this to go rallying up at this point. So, if you do want to trade this, make it a really cheap trade. That's the way I would look at that. Any chance you tell me? I'm not going to do a live. I'm not going to tell you it's live and then pre-recorded. That would be silly. That would be very, very silly. China GDP opinions beat expectations. Yeah, I mean, it's really like, if you look at it, congestion levels, road congestion, all that kind of stuff, traffic levels are kind of back to pre-COVID. So there's a lot of good stuff that's coming out there. I think the bailout of the housing sector looks pretty positive. The funny thing is, normally when you get a rally in Chinese equities, margin levels go up for Chinese equities, and they haven't. Not one little bit. That's a little bit weird. So a lot of people there are not quite convinced yet. Could be positive or not. Christian, when is the new software coming? Do I need to schedule a call to get access? Still in the works. The last 10% of a software team seems to take as long as the previous 90. That's apparently a golden rule for software development. But yeah, we are working on that. Thoughts on the federal debt ceiling? It undoes quantitative tightening. So in the short term, it's actually good for markets. But as we get closer to that date in June, expect some volatility and a lot of scary headlines. But I don't think it really, makes that much of a difference. Google down, Tesla up. Got already Tesla because thoughts on PPI report tomorrow. Yeah, that's a big deal. Always, PPI for me is the new CPI, producer price index. So definitely have a look at that. That's kind of a pre-warning sign for what we might get on the next CPI reading there as well. Eric Elliott, we're very happy. His letter was great. Market whispers, indeed. I think it's a stellar piece of literature that I would strongly recommend. And obviously, you guys received it. Brilliant. Think about signing up for it. There's some links in that. Otherwise, head over to Trading Floor Whispers and pop that in the chat here if you like, and have a look at that and maybe sign up for that. Do we trust Chinese financial data? That's a whole nother conversation. How old is Winston? He's a permanent puppy. That's the way I look at it, which I think is what matters. Big's expiry this week. Indeed, a lot of 4,100 calls expiring this week, which are probably short. So not necessarily super supportive. So yeah, that's why I'm not hugely bullish on it this week. Any chance on breaking the 4,000 resistance today? Let's have a look at the futures, shall we? At 4,007. So the real question is, do we close above 4,000? And I think that's kind of a prerequisite for really doing anything here. The fact that we didn't on Friday is also a little disappointing for you rally lovers out there. So definitely watch out for that. So it's a very somber start to the day. QQQ has a little bit more oomph, but still hovering around the 280 mark there as well. Roblox up 15%. Let's have a look at that. So what's up the most? Mullen is up, down 10%. Roblox up 15%. Very nice to hear that. One of my coaching students works there, so it's always a nice bonus for them. Does it say why? Where did my chart go? Here we go. Roblox. An R even. Nope. No idea why. Absolutely no idea why. I know somebody who would know, but he's not on the chat here. Tesla up 2%, a little here. Coinbase up 4%. Volatility up a little, 1.7%. And then sort of Kroger and CF and Walt Disney all up about a percentage point. Amazon up 0.5 point. Still struggling with the $100 line there. Apple up 1/3 of a percent. Barbara basically flat. Netflix flat. Everyone's gagging for those earnings to come out later this week. And Microsoft down 1.2%. And then, yeah, a fair bit of red here, but not a lot of very serious reds. It's just sort of like we don't quite know which way to go. When is Cannes? 28th. So on the 28th of this month, which is the next Saturday, not the one coming, but the next one, you will be seeing me in Cannes, enjoying hopefully the sunshine and a blue sky like this. And I will teach you Wall Street's literally biggest trading secret, how they make every trade more profitable and less risky at the same time. And they do the same thing for their long-term portfolio investments. So check that out. Simplest ways to invest in bonds. Just buy the bleeding things through your broker. You might need to call them. I find with bonds, a lot of the time you need to call the broker. They don't always list them all, but pretty much every expiration is available in the market. What do you think about gold? We did a video on that the other day, which I think was a reasonable call because it's gone up a fair bit. Probably a little late to the party, I would say, at this point. But yeah, I'm not sure about the timing here. Gold. If you just look at the gold trust, for example, like, we've done a lot. So I'm not a big fan of jumping on stuff that late. I think, I can't remember when we put out the video, but we were down here somewhere. We've gone up another 9% since or something. So I wouldn't necessarily jump in at this point, but that's just my view. Are you filming in a hotel, Kintsugi? Indeed, yes. We're filming at the absolutely glorious Atlantic Hotel, which is where all the sort of Cannes Film Festival stuff happens and stuff. We have an absolutely staggeringly beautiful view, and I'll share some bit of touristy stuff with you as well on that. It'll be great fun. Links down below. It's the first link in the description. FelixFranceLog/secret. You have to sign up. It won't be on YouTube. Tesla earnings will always be interesting indeed. IDEX picking up nicely. Yeah, that one got clobbered quite a bit, didn't it, last year? But it's picking up steam. Good stocks tend to. Still has a fair bit to go. I mean, it was possibly a little bit too exuberant up here, but we're kind of getting back to where were we pre-COVID at 500. So we're heading in the right direction, which is always nice. Felix will be swanning around, charming the locals and trying to get them to sign up for his course. I don't think I'll be doing quite that, but it'll be great fun. BK Dragon asking here, do you see a flat market or a downturn? I sort of see for now, and I can do a quick recap here. I'll see. At the moment, we're very overbought, right? This is the S&P RSI, which basically says it's overbought. And also on the NASDAQ, we're very overbought. That doesn't mean you can't go up a bit more. I mean, you can be overbought for weeks or even months. But if you look at the chart, there is a huge amount of resistance where we are right now, basically at 4,000. And that's the downward trend line. So I still see that intact. And I see a huge amount of short call options expiring on Friday, which is not particularly supportive. And just basically hedging flows, I think, is what's going to dictate the market this week. What the heck does that mean? Well, I thought I wrote it down somewhere, didn't I? I thought I did somewhere. Yes, here it is. So dealers hedging, they're basically selling when it goes up and they're buying when it goes down. So you're kind of just like wobbling sideways. That's sort of the way I read it at the moment. Of course, a huge PPI miss tomorrow could change something, or a massive earnings, event this week. Netflix perhaps has the capacity to do that. Jack there, I don't trust the crypto rumors, never have, never will. I think CBDCs are coming. I don't think they'll be backed by anything other than the charm of, your elected representatives. How do you find me on FB? felixfriends.org/FB group, Mark. That's the easiest thing. Links down below in the description as well, but I'll pop it in here for you as well. felixfriends.org/FB group, and you find me there. Join the group, ping me a message once you're in the group, and we can have a chat. Funky Monk, appreciate you sharing that on Roblox here. Active daily users are up 16%. Moving to the Hamptons for the summer. It's a nice place to spend the summer for sure. Touch hot, actually. A touch hot. Copper might be better than gold long term. Well, the whole copper trade has been about, and I think we talked about that last week as well. It's about electrification, right? It's about EVs and all that sort of stuff. So copper has rerun its run. It seems to have peaked again here and possibly be coming down a little bit. The China reopening play was a big deal there, obviously, for copper. So again, I think probably a little late to the trade, and maybe look for another opportunity there. VIX just flew, did it? Well, it collapsed, didn't it, last week? It's up 2.5% only, so a little bit. Still below 20, which is pretty low. If you look at the VVIX, which is the VIX of the VIX, also very low, 80, staggeringly low. So all of them, but picking up a little bit there. But we are at like 2019 levels of low VVIX. Do you think Netflix or Tesla ERs should be worrying? Probably Tesla's earnings release is more worrying than Netflix for me. I think it'll have a big impact on the EV market there as well. VIX is up 8% for you, is it? Two and a half. What about on here? I got 1.85%. 2.5 is probably about right. So I don't see a huge move here. But appreciate that, Carl. Not sure where you're seeing that. Always possible. There's a delay on one of these things. Tesla's an energy stock. Yeah, that's an interesting one, isn't it? I mean, we could have a long conversation about whether Tesla is a car company, a tech company, or an energy company. At the moment, revenue comes from cars. So I would, at the moment, say it's a car company with the potential to be a subscription tech business, well, transport business, really, with the potential to be an energy business. But I think at the moment, the revenue is where it comes from. And therefore, I lean on the car front. I know that's not a popular opinion, but there we are. Hit like and the echo will never come back, says Andrea. Sorry about that. I know you've got sensitive ears, Andrea. Thank you for all the info, says Rory. Much appreciated, guys. Seriously, if you want to learn some good stuff, do come and join us on the webinar, the masterclass on the 28th, Saturday, that is. As I've done it so more of you guys can join. We did the last one on a Tuesday. Here it is, felixfriends.org/secret. Sign up for that. It's going to be great fun. And in the meantime, if you've got any questions, any inklings, any itches to make 2023 a better year, then give us a ring. Have a chat with us about how we may be able to help you get you there, get you to financial freedom faster at felixfriends.org/coaching. A huge thank you to you. Apologies for the echo at the beginning. We got to keep it interesting sometimes. You got to throw in a bit of echo. No, that wasn't intentional, obviously. I think it must have been one of this monitor sailors that was on. And I look forward to seeing you on the next one. If you enjoyed this video, do one thing. Hit the like button and go to felixfriends.org/secret and sign up for the masterclass. And I hope to see you on the next one. Appreciate you tuning in.